Joining me now is the Wall Street Journal's chief economics correspondent, Nick Timiraos. It's great to have you back. Nice to see you.
Thanks for having me, Scott.
Seems like Mr. Griffin is aligned with many on the Fed right now. Maybe you'll get one, but there seems to be caution expressed by many of the Fed speakers we've heard this week, including today. Austin Goolsbee said, quote, "I'm just a little uneasy with too much front loading until we're sure that inflation is coming down."
Yeah, that's right. I think what you're hearing is there's a debate about whether you cut in December. October seems priced in here. It's hard to see what would change the committee just because there's not that much data. And if there's a government shutdown next week, who knows what data we're going to have in hand. So it feels to me like there's a debate around, do you do more than 2 this year? Do you do December? If you do 3 this year, what's your stopping rule, right? The Fed, when they're cutting, the question is, when do you stop? When you're holding, the question is, when do you start either going up or down? So to me, that's the key question right now is it going to take, more deterioration in the labor market for them to keep cutting? Or do they need to see evidence that things are actually stabilizing before they go back on hold?
Well, I mean, they're in an especially tricky spot, don't you think? And it's, I think, why the chair himself has gone out of his way to make it clear when he says there are risks on both sides, that nothing is firm on where all of this is going. If they cut too much because they end up more concerned about the labor market and that spikes inflation, then they've caused a mess.
That's right. I still think the Jackson Hole speech was important. The shift at Jackson Hole was really the first time Powell came out and said, we think we can treat this as transitory inflation as a base case, and will have to be proven wrong. And of course, no matter what you do, you're going to have to wait some time to see if your initial assumption was wrong. So, how long is the Fed going to be comfortable taking that view, given, as Ken Griffin just said, it could be a while before we really see the peak, even if it's sort of a longer and flatter peak on the, resumption of inflation pressures. So the issue there, I think, is what is the Fed going to see that's going to tell them you could be nourishing a cycle of more persistent inflation as you continue to lower interest rates? Is it something in the labor market? The housing market doesn't seem to be a threat here to reanimate price pressures. So where is that going to come from?
You think that the Fed chair fears what Ken Griffin said earlier today? It's coming. It's coming, when he talked about inflation from tariffs is just yet to show up in any meaningful way?
Well, you hear people say that it's coming with respect to more labor market fragility. So when he says there's no risk-free option here, look, in 8 months or 9 months or a year, it's going to be obvious what the Fed should have done. But sitting here today, a couple of weeks ago, people were reacting to the pop in jobless claims. You can find measures of labor market slack opening up if you look hard enough. And so maybe that is where you should be worried right now. And then, of course, you do have this concern that inflation's been away from the target for a while. I think the key question, though, Scott, is going to be what would actually nourish inflation pressures from a one-time increase in goods prices?
Lastly, Nick, what'd you make of the Fed chair saying of stocks they're fairly highly valued? As I suggested, I don't want to make too much of it. He didn't go out of his way to offer this up, but it is how he answered the question. And when he speaks about something like that, we listen.
It didn't make much impression on me because this is something that's been in the Fed's financial stability report for a while now. They've been referring, at least the staff has been referring to asset prices, risks around those valuations as notable. So it sounded to me like he was sort of repeating something that the Fed has been saying really for several quarters here when it comes to the stock market. But obviously, a lot of people glommed onto it. So, maybe I missed something there.